Hey guys, welcome back. So I wanted to make a quick update here on the EOS chart. This is the EOS versus the US dollar, and these are the one-day candles. I always say, and I will continue to say, that so long as we are downtrending, we need to respect the trend and assume continuation until we are wrong, and then when we are wrong and it reverses, then we start playing it the other way. So we have a very obvious downtrend here because we are doing lower highs and lower lows. We are below moving averages. Moving averages are bearish because they cross bearish here, so it means the blue is above the 50-day moving average is above the 20, which means this is bearish. And the price is bouncing off the moving averages and going lower. So these are the three things that define a technical downtrend. So we are downtrending and we should respect this until proven wrong. Now, the idea is that you short on the bounces, right? You short when it's bouncing off moving averages, and then you wait until and then you take some profit when it goes down. Then you wait again for the price to touch moving average, and then you short again, and you short the bounces when it touches moving averages. Just like in uptrends, you buy the dips when it's bouncing on the moving average, and then you sell somewhere here when it goes up, and then you wait, and then you buy the dip again when it touches moving average, and then you hold or whatever. But of course, the higher it goes, the higher it is, the more risky it becomes to buy dips, right? It's not the same buying the dips here at the beginning of the uptrend then continuing to buy dips after it's gone up whatever much, like 3,000%, I mean 300% or 1,000% or whatever it is. Then it becomes very risky. You should stop buying dips. Just hold what you have and then you sell it the best you can time the top, or the closer you can time it from the top. And the same applies for downtrends. The idea is that you short when it bounces off moving average, then you short, and then you wait for it to touch moving average, you short again. But of course, the lower it goes, the more risky it becomes to continue to short. So, after it corrected 70% already, this vertical and this fast, it becomes very, very risky to continue to short the bounces here. So what I'm trying to say here is that I'm not calling the bottom. I'm just saying it's not safe to continue to go short. And now I'm going to tell you why. Not only because it corrected already 70% or more, the price is reacting to the main trend line here. This main trend line, I used to have it up here before, touching the closing price of this low here. And going from this low to the closing of this low. The reason I kept it like this is because the price was reacting to this level when it was down here. It was reacting, so this line was okay here. Because some traders will use the closing price and other traders will use the wick of the candle. It means both ways are correct. There's not a right or wrong way to do it. Both lines are correct. As you can see, the price reacted here in this level, but now if you adjust the line down to touch the wick of the candle, the price is also reacting to this level here. So there's no right or wrong way to draw support and resistance lines. Some people will do it at the closing, some people will do it at the wick. That's why the price will react in both levels. So anyways, I adjusted the line here to touch the wick of the candle, and now the price is reacting here to the main trend line. This is one reason why it could be bouncing. The other one is because it corrected already 70% very fast, so it's overdue for a big bounce here, for a decent bounce. The other reason is the RSI is oversold and crossing bullish, so we could be seeing a reversal. But the main reason, guys, the main reason here is on the weekly candles, which I just realized about this. I think it was yesterday or the day before. The price is reacting to the 50-week moving average. The 50-week moving average is super, super strong. So I'm like very confident, in saying that I don't think the price is just gonna go through it like nothing. It's not only the 50-week moving average, it's also the main support. It's also very oversold on the weekly, the RSI, and it seems it wants to cross bullish. So it's not only the 50-week moving average, it's more signals that you have everywhere, but the 50-week moving average is the main signal. I guess the short message for this video is don't mess with the 50-week moving average, because if there's a level that you could call a potential bottom, that would be the 50-week moving average. And especially after correcting this vertical, 70% this vertical has been week after week after week after week after week doing nothing but going down and going through the 20-week moving average like nothing. Something is going to happen here. I mean, very likely, of course, nothing is guaranteed. There's no, there's no certainty. It's not 100%. But I would say, if there's a level where you can call a potential bottom, that would be the 50-week moving average. And if it's not the 50-week moving average, if it goes down even lower than that, which is possible as well, it could go to $4 to revisit previous lows here. But I think even if it's only temporary, we will have either a big bounce here or a longer period of an uptrend for some more time. Even if in the future we find new lows at, for example, $4, I'm not saying this is not out of the picture, but for now, for the time being, I wouldn't mess with the 50-week moving average. Now, in the longer term, if the 50-week moving average doesn't hold and the price goes down, even with that, I don't think it's gonna go that much lower. Even though going to 4 is a big, is a big percent, you could make a lot of money going short here. But if the 50-week moving average eventually at some point in the future doesn't hold and it breaks below, then the next big support where you could call again a potential bottom, that would be the 20-month moving average. So, the 20 and the 50 are the main moving averages, and the longer the time frame, the stronger it becomes as a support. So, but right now I think it seems this weekly candle is going to close today, so it seems it will close right above the 50-week moving average, or just touching the line or right above it, somewhere there. So I expect a green candle next week, showing a reversal here, even if it's only a temporary reversal. But so many signs like RSI oversold in both the weekly and the daily. The main trend line here, the 50-week moving average is the main support here. So many signs here. I think we're gonna see a reversal. But yeah, of course, nothing is guaranteed. So guys, I think that's all that I wanted to cover for this video. Thank you very much for watching. Thank you for subscribing to the free Telegram channel, and for following on Twitter. So yeah, this video is not on YouTube, but it's on my website, and yeah, I share the links on Telegram and on Twitter and on Steemit. So yeah, guys, thanks for following there, and good luck out there. Bye.